Hey folks, let's have a look then at foreign subsidiaries. Now, here's the problem, look, that you've got H in dollars and S in dinars. So what we can't do as we normally do is just add them across. So therefore, we are always going to have to retranslate, okay? And we retranslate SFP figures of the subsidiary at the year-end rate, okay? So we translate all the SFP, and when I mean the SFP, what I mean is the subs net assets, which is the subs assets and the subs liabilities. Translate them all from dinars into dollars or whatever currency. If it's on the income statement though, again, we can't just add across, can we? But if it's on the income statement, again, we have to retranslate the subsidiary, and we retranslate the subsidiary's income statement. And when I say the income statement, I mean the subs revenue all the way down to profit after tax. But we do it not at the year-end rate, because the profit and loss isn't at the year-end, is it? And SFP is, it's over the year. So we use the average rate. Okay, so far so good. Now, a few steps then. If you get given, as you normally will, SFP steps. How do we deal with an SFP with a foreign subsidiary? Step 1. Translate S's assets and liabilities at what rate? If it's the SFP, at the year-end rate. Step 2. Create the equity table as normal. Okay, so nothing new here. Create the equity table. The thing that is new, first, in the foreign currency. Okay, and also just the year-end and acquisition columns only. Okay, so no post-acquisition, no balancing yet. Okay, so create the equity table in the foreign currency, just the first two columns, not the post-acquisition. Second step with the equity table is now translate the year-end and the acquisition column that you've just done there. So translate it. At what rate would you do the year-end column? Obviously at the year-end rate. What rate would you do the at acquisition column? Obviously at the acquisition column. And then now calculate the post-acquisition. Okay. Now I know this is a lot to remember, but you know me, I go through then lots of illustrations, then an exam question. So you've done that. So first of all, in the foreign currency, the first two columns only, no post-acquisition. Then translate those first two columns only, the year-end at the year-end rate, acquisition at the acquisition rate. Now you've got the year-end and the at acquisition in dollars. Now you can calculate the post-acquisition in dollars. Step 3, calculate goodwill. But when you come to calculate goodwill, do it in the foreign currency again. Okay, do it in the foreign currency. Everything in the foreign currency. Then get your goodwill answer and translate it at acquisition. So it's done in the foreign currency here. Then translate it using the at acquisition rate. Then translate it again at the year end. Okay, you will have a difference. That difference here will be a goodwill foreign exchange difference. Okay, and that goes to retained earnings and maybe to NCI as well if you're doing the fair value of NCI. And then everything else is pretty much the same. Okay, so try the illustrations, come back to this video afterwards, it'll probably make more sense, then have a look at the exam question.